Like one, we have taken this scenario question from BPP kit 145 to 149. These are related to your IFRS 15. Um, Bridge North Company. Bridge North Company has undertaken Bridge North Company has undertaken a 5 million contract to repair a railway tunnel. By the way, one thing you should remember, sometimes you will see that the original value of contract was 5 million, and then in next years it can increase. It is possible that when you have long-term contracts, initial estimate is 5 million, later on some revision is also possible. So always pay attention that this 5 million, is it 5 million throughout, or did it change? So if we see that in 2009 and 2008, 2 years, 5 million remains same. The contract value remains same. Anyways, just an additional note. The contract was signed on 1st April 2008, and the work is expected to take 2 years time, which means April 2009 until April 30th of March, 31st of March 2010. This is a contract where performance obligations are satisfied over time. Long-term periods, I told you that these long-term contracts are over a period of time, not point in time. And progress is satisfying performance obligation is to be measured according to the percentage of work completed as certified by a surveyor. So a third party comes in and they certify how much work is completed. So this is just like before when I was talking to you that you have three types of contracts. Here somewhere I said, sale of goods, point in time, the day when you deliver goods, the same day you recognize, provision of services over a period of time, and long-term contracts as a percentage of work done. So this is very typical question has come in. So as a percentage of work completed, Bridge North Company has an enforceable right to payment. Now, this is also very interesting. You see, when I said that we were discussing in the previous video that if the client has willingness and capacity to pay or not. So they have an enforceable right to payment, which means that you can recognize the revenue. The question is telling you that you should not have any doubt about the payment. Now, if I had not told you about this thing, which I just told you in the last part of the video, that the client has capacity to pay, if I had not told you this sentence, probably you would not have understood the importance of this word. You would just, read it and move on. Okay, enforceable right to payment. What does that mean? Enforceable right to payment means that the client has willingness and capacity to pay. You will get your money. There is no doubt about the payment. Okay. So this is what it means. So it means that you can recognize the revenue. So at 31st December 2009, the details of the contract were as follows. So they are giving you the details for the next two period, 2009. So this is full 12 months of 2009. This is starting from April until December, whatever, 8 months are here or whatever. So what do we have? Total contract value 5 million. On until 31st of December, the money which they have spent was 2.3. And actually with 2.3 million, you were not expecting to complete it because this is the money which you have spent only during this period and the work is not completed. Therefore, estimated cost to completion, which means future investment, future expenses will be 2.1 million. So you understand that 2.3 I already have spent and 2.1 I will spend further to complete it. Then work invoiced to date is 2 million and cash received to date is 1.5 million. So what you have invoiced, what you have received 1.5. And of course, if I ask you contract asset, you can calculate contract asset. Anyways, we'll see. Percentage certified complete 40% at the end of the first year, 75% at the end of the second year. Question says 145. What is the profit recognized for the year ended 31st December 2008? So how much profit you can recognize until 31st December 2008? So it means that this information is not available. When you are preparing 31st December, you never had this information actually. They are giving it to you now. But when you were in 31st December 2008, you never had this information. So just focus on this part. So in doing these questions, the first thing you should calculate is contract profit. Always first calculate how much is your contract profit, and then you move further. For example, if I come back, now you guys see the screen, right?
Yes, sir.
Okay. So contract profit is how much? I would say my contract revenue is 5 million. I'll just put it like this, okay? 5 million with three zeros. My costs to date, whatever cost we have spent so far, that is minus 2300. And then I would say further cost to completion, okay? And further cost to completion is minus 2100. There is nothing else. And here you say that, your, let me just underline it. This is your contract profit, contract total profit, okay? This is total profit from the contract. When it will be finished in 2 years time, you expect to make 600. And then you say profit until 31st December 2008. How much work you have finished? You have finished 40%. So this is the total profit, and you take it from here, and how much it comes out? 40% we have done, right?
Yes, sir.
So 240,000 you can recognize. There is no answer option, but you can write it down, 240,000. Your answer is 240,000. I removed three zeros on the top. So you can imagine that there are three zeros, okay? So
Sir,
sorry?
sir, the contract was signed on 1st April 2008 and the year end is 31st December 2008.
So,
So we proportionate 9 months like,
no, this is not for full year. All of this data is for 9 months.
okay, okay.
All of the data is for 9 months. So you would recognize your profit is 240,000, okay? Because three zeros we have put up there. Clear? Now, one thing very important to understand. Is everybody attentive, listening to me?
Yes, sir.
You see what we did? We profit
Yes, sir.
accrued over life of the contract. We said that the total profit from the contract will be 600, and the profit which is related to 2008 is 240, because 40% of that has been done. So what I'm going to do in 2008, I will show 240,000 profit. In 2009, I will show something else. And whatever is the balance, I will show in 2010. So we say that profit accrued over the life of the contract. Okay. My total profit is 600, but I will be showing accruing it over the life of the project. 1 year, 2 year, 3 year. Very important sentence I'm going to write now. Losses are recorded immediately, not accrued over life. This is very interesting. If the project is making a loss, let's suppose that sometimes you start a project, and you, after starting the project, you find out that my costs are being more, because not all of the projects are profitable. Sometimes some projects, they make us loss. So let's suppose for a while that my project cost to date is 2.3, further cost is, I don't know, 4 million, and I see, okay, let's make it 3 million, and I see that my project ultimately is going into loss. So what do we do? Do we also accrue the loss on 40% ratio? Like profit we accrued on 40%, right? So can we say that, okay, total loss is 300. This loss is going to happen over a period of 3 years. So let's put 40% in this year loss, 40% in next year or something. Answer is no. When you see a loss, you immediately recognize it in full. Do you understand my point? This is the difference between profit and loss thing. When you have profit of 600, you accrued some profit, 40% here, maybe 50% next year, maybe 10% the other year as the work was going on. So profit you accrue over the life of the contract, but losses are recorded immediately. Losses you cannot transfer to next year. Profit you can transfer. Loss you must record in the same year. If I knew that I am going to make a total loss of 300, although this 300 loss is coming from a project which has a life of 3 years, so can I say that if 3 years loss is coming in 3 years, let's put $100 loss this year, 100 next year, 100 next year? Answer is no, you cannot do that. Whenever you see loss, the total loss, you record it in the same year when you get this information that you have a loss. As soon as you get information, you immediately record the loss. Are we clear?
Yes, sir.
Okay, now that was interesting point to learn from this one question. I mean, this has got nothing to do with the question, but we learned something. Now, can somebody quickly tell me that 2008, 31st December, how much contract asset do you have?
540.
How did you calculate 540?
I took the contract profit.
No,
Then
contract profit, no. You would say how much you, actually it is between received and invoiced. Not the
yes,
profit.
I subtracted the work invoiced.
How much, so how much invoice you would give them?
Uh,
40% invoice. 5 million into 40% makes you what?
2 million.
So you could only invoice 2 million. How much you have invoiced yet already? 2.1. So you actually have a contract liability in this case, because
Mm-hmm.
you already have invoiced them more than what you were entitled to. You were entitled to only 2 million work, and you have actually received 2 million cash received. Uh, no. I'm sorry. I was seeing this 2.1. This is estimated cost to complete. So I was drawing the wrong lines. Let me draw the work invoice to date is 2 million. Okay. And cash received to date is 1. Okay. So there is no contract asset, because you should be invoicing 40% of that, your accrued income, whatever. So your work completed is 2 million. You have invoiced also 2 million. So contract asset will be how much? Zero. Contract asset will be zero, but you will have a receivable. The difference between these two, which means 500,000, that is your receivable. Receivable is the difference between what you invoiced and what you received. I invoiced 2 million and I received 1.5. So 0.5 million, I am waiting payment. This is my receivable, but contract asset is zero. If they tell you, let's suppose I give you a question, let's suppose I'm just playing with this scenario, okay, so that you understand full. Contract value is 5 million. uh, Completed, sorry, what is happening, completed is 40%, let's suppose. So it means that work certified just only 1.8 million. In this particular question, they tell you that they already have invoiced 2 million. Okay. The question says that you have invoiced 2 million. I am supposing that we have invoiced only 1.8 million. And then I say that we have received 1.5 million. I'm just, instead of this 2 million, I just changed this million with 1.8 million. Okay. You understand what I'm doing? Just trying to make you understand some more concepts from one question. Now, can you tell me how much is contract asset and how much is contract receivable? Yeah. Contract asset is how much?
100.
2 million minus 18. Because you have a revenue, you could have work certified is 2 million, your accrued is 2 million, but you invoiced only 1.8. So 200 is your contract asset, and receivable will be 1800 minus 1500, and 300 will be your receivable. So now you have this is your asset, this is your asset. How much is the total amount?
500.
500,000, right?
Yes.
And you, how much work you have done? 2 million. How much cash you have received? 1.5 million. What is the difference between these two? This is the same 500,000. That my work is certified 2 million, but I got cash only 1.5. So it means 500,000 I have to receive from my customer. Within this 500,000, 200 is my contract asset, which means I already have invoiced, but client has not given. And 300,000 will be my receivable. Okay. No, 300,000 is I have invoiced but not received, and 200 I still have to invoice. 200 I will give you invoice. Are we clear on that?
Yes, sir.
If not, please ask me. I want to make sure that you guys understand, because I'm just trying to do with one question many different scenarios, so that when you go to exam you don't get confused. Anything possibly which could come, I'm just touching everything from here.
Sir, in contract asset, do we add the cost to date?
No, cost is my profit. Cost I'm not talking about.
Okay.
My client does not know my cost. I don't tell to my
Mhm.
client that this is my cost.
Okay.
With client, I only talk about my revenue and my works certified. Why would I tell the cost? So I go to the client, I say, see, my certified work is 2 million, but I already only have given you invoice of 1.8. It means that please wait, 200,000 invoice I will send you tomorrow. So this is my contract asset. And this invoice which I sent you, 1.8 million, you only paid 1.5. So this is my receivable, 300. So the total money which I have from this contract as of today in my asset is 500, which is 200 as contract asset and 300 as receivable. So these are two different things. Contract asset is always a difference between, contract asset is difference between these two, and contract receivable is a difference between these two. Clear?
Clear, sir.
Listen, I hope I'm not making it confusing. This is how you should be doing these questions. I mean, if I do only what the book has done, the entire picture is not clear. But I'm sure that if you watch the video again, you would understand that we have actually done better thing. Okay, 146. We did 145, right? This was 145. So 240,000. Your answer was here, by the way. Your answer was 240,000 here, okay? The remaining part, I just discussed something else. So 240,000 was your profit recognized. But we learned two things from this question. We learned how to treat the losses. As I said, that losses should be immediately recognized. Always remember that. And we learned the contract asset concept and contract receivable concept. Okay, so these are the two further things. So 145, actually we made it 3 questions. Now let's do 146. What does it say? 146. Using the drop down box, what amount would have been included in trade receivable at 31st December to this question has come in. What is the amount in trade receivables? Yeah. Now they put the word trade receivable. Trade receivable will be your 500,000, the sum total of both of them. That contract asset of 200 and contract receivable of 300, together it make your trade receivable 500. You should be putting answer as 500. This is done. We already have seen it here, because we said that you have 2000 here, which work certified. The money which you received only 1500. The difference between these two is 500. So trade receivables are 500. Then you have question number 147. What is the contract asset to be recognized? Yeah, how much is the contract asset? Now, so your contract asset at 31st December 2009. Okay, now you have come to the next period. Your total contract value is 5 million. It did not change. Certified, how much is there? Certified is 75%, which means that you can actually 3750 is certified. How much is invoiced? Invoiced is 3 million so far. And how much is balance? The balance is 750,000. So 750,000 is one part. This is yet to be invoiced. And you should also consider your profit. How much was your total profit? Now let's see profit. Okay, so I say that total revenue is, how much is the revenue part? Is 5 million. And my cost will be 3600 we have spent, plus 700 we will spend later. So I should say minus 3600 minus 700. So my total profit is 700. Out of this 700, because I have completed the task, how much I have completed? 75%. So 75% I am entitled to profit as well, which is 525. And then when I add up these two numbers, total will be 750 plus 525, 1275. This should be giving in you what is here 1275. Your total 1275 you should recognize. Clear?
Yes, sir.
Sir.
525 is your profit, which you will recognize that, okay, this is the work I have done. So this money I'm going to receive. And there is actually contract value, contract asset, cost, contract asset. No, I think I should not do it with this. I should take it not the, I'm sorry, I should not take it this thing. Total cost, okay. Cost incurred so far. How much is that? Cost incurred so far is, yeah, we can do it like this also. There is another method also, but this will work. This is okay. You can put it 1275. 1275. Then you come to question number 148, which is Bridge North Company measures performance obligations completed by reference to percentage of completion. Identify which two of the following would be an acceptable method of measuring the performance obligations completed. So let's read this thing. Which two of the following would be an acceptable method of measuring the performance obligations completed? So work invoice to date as a percentage of total contract price. Acceptable method of measuring the performance obligations. How do we measure? Okay. So cash received, no. Cost incurred as a percentage, yes, it is possible. And work invoice to date. These are the two methods. Whatever cash you have received, it is not about performance obligation, because the client might not have paid you anything. So if the client does not pay you something, it does not mean that you have not done the performance obligation. Performance obligation may be completed, but client has not paid the cash. So cash received definitely is not the criteria for performance obligation. Similarly, time spent as a percentage of total expected contract time. Time spent is also not the issue. It is not about how much time you spent. You spent more, you spent less. We don't care. We only talk about either work invoiced or we talk about cost incurred. So answer should be this option, cost incurred and work invoiced. Then we have 149. If at 31st December 2008, like here, bridge company had completed only 10% of the contract for cost of 400,000 and felt that it was too early to predict whether or not the contract would be profitable. What amount, if any, could bridge company have recognized as revenue? Now that is very interesting. Okay, that's a very conceptual question. It said that end of the year, actually we know that end of the year they had finished 40% of the work, okay, and spent 2.3 million. But they say that let's suppose that the bridge company had only completed 10% and spent only 400,000, and they felt that it was too early to predict whether or not the contract would be profitable. They are not sure if the contract is going to be in profit or loss. What amount, if any, could Bridge North have recognized as revenue? When you are not sure about the fate of the contract, whether it is going to be a profitable or not, and you have only spent very little percentage, what you should do, whatever you have spent, that you consider as your revenue. So that your, so if you this is your cost, you already have 400,000 cost in your financial statement, you have spent it, so you recognize revenue also as 400 so that the profit becomes zero. So when you recognize 400 as revenue, essentially you are making profit as zero. You are not claiming any profit because the question says that they were not sure if the contract would be profitable or not. So it means we cannot recognize any profit. So if you cannot recognize any profit, just make cost and revenue equal. Whatever you have spent on cost, put the same amount as revenue so that your contract profit is zero. And answer to this question should be 400,000. Okay.